Hello traders and welcome to Forex Friday. It's still Norpan here, founder of Master the Markets Illiterates Conference and the Traders Open Day. So today we are going to just cover a topic first, just as we always do, and then we're going to go on into our live trades and trade reconcile. So today we're going to be looking into the topic of momentum. It is such a very key topic that actually surprisingly most traders do not even know about it or do not even know how to actually calculate it. So let's go through this topic on momentum. And the first thing I want to cover is, firstly, of course, in your mind, some of you might be thinking, what is momentum? What is momentum? Okay. Now, some of you might be just saying, okay, Tiru, I'll just look at a chart and I'll just see if it is a big bar like this, and I'll just say that's really high momentum. But do remember, traders, but okay, when you look back in hindsight, it's pretty much clear. And not only that, it's still subjective still sometimes, because you can take a look at these two bars here and say, you know what, is this high momentum or not? Not only that, but we must be able to track momentum in real time as well. Okay, in real time as well. So let's take a look at this at the moment now, on the subject of what is momentum. Is there a quantitative way of measuring momentum rather than being subjective and saying that this bars over here are high momentum and this is low momentum, and what we want to do is remove the subjectivity so that we don't have doubt and we're absolutely clear when we trade, and we can trade with conviction. So as you can see, the best way to do that is have a quantitative measure. When you have a quantitative measure, when you give that definition to a room of 1,000 people or 10,000 people, they will all have the same answers. So let's go through this. So what is momentum? Okay, and then I'm going to go through why this is important and also how you can use this as well. So the first thing about what is momentum, there's an equation on this that you can really help you on, and you can find this on the web as well. So the equation of momentum is current price minus price of n bars ago. Current price minus price of n bars ago, or you can say the close of the current price. So for example, right now, okay, so we can see over here that let's say I want to measure the momentum of current price. Let's say that is that 127.31 at the moment it's at. So I would just put 127.31 minus the price of the n bars ago. Now here is the part that you have to decide on which part do you want to actually calculate the momentum for. Now, if you just want to calculate between these two bars, then it's just 1 bar ago. But if you want to calculate it right from the beginning over here, then that's going to be minus 12674. Okay, minus 12674. And that will just probably give us about 60 pips. Okay, just a little bit shy than 60 pips over here is what will give you, to be exact. I think it will give us about 57 pips if I'm not wrong. If I'm not wrong. So let's see, 4%, 11, 13. Yes, that's right. So it'll give us about 57 pips of momentum. Okay. Now it all depends. You see, traders, all depends on what you want to measure, what you want to achieve. Then that n bars ago will be determined. But that is the equation for momentum. Current price close minus price of n bars ago. So if I were to apply this on the daily bar, on the daily chart, so basically if I want to measure the momentum of these two bars, let's say, then all I would do is current price minus n bar ago, just 1 bar ago. I just want to measure that between these two bars. Then that's going to be what we would say. Let me just get the exact prices for you guys right now. So that's going to be 126.27 minus 127.33. So that would just be 127.33 minus 126.27. Okay, so that's what we will be doing. So that will give you the answer in terms of this equation, which now has quantified the level of momentum. Now, of course, if this shrinks, let's see for here what we are looking at over here basically. So that's going to be 6. That's going to be 126. So that's, let me just take a look. So it's going to be 126.27, I said, didn't I? So 106 is going to be over here, right? So now let's take a look at another part of the chart. So 106 pips for these two bars over here, right? And then traders, you can see, let me just erase that away. You can keep that. Now between now these two bars, or in fact we don't even need to do that. We can just do this two bars only, which is kind of a potential turning point, as we may call it. So let's take a look at that. So in terms of that, the close to close, let's say we just say 40 pips, right? 40 pips. Now you can see that first the momentum was on the downside, 106. Now it has turned to the positive side. So momentum is turning. And then over here, as you can see, between close to close, and then that's about 10 pips only. Okay, that's about 10 pips. That's what we can see. So we can see a turning point here to plus 40 to plus 10, and that is how momentum it can help you. In fact, I'm going to go there into much more detail into the third section of this topic over here. But the first part is what is momentum and how do you calculate that? I've given you the equation and I can show you in practical example as well on how this actually changes. Okay, now let's moving on to why this is important. Now why is this important? Because remember that momentum is your only leading indicator, because it's the only one which actually leads price, because think about it, because if a car is moving at 200 kilometers per hour, 250 kilometers per hour, there's a very, very high probability that for the next 1 minute, 2 minutes, it's going to continue in that direction, because for it to turn immediately is going to be a very, very low probability. So as you can see, momentum is the only indicator which leads price, and if it's coming from price itself, because the equation that I just showed you is on price itself, when that is the point, that is the way it's derived, then of course then you're not having any derivative. That means there's no lag at all. So you can see how priceless and important this would be. Okay, this is non-lagging altogether because the equation is based on price alone. Okay, now how do we use it in practical application? One thing, you can definitely use it in terms of intraday or even in terms of end of day as well. In any time frame that you're looking at, your higher time frame, daily, weekly, whatever it is, you can base your bias. You can base your bias on whichever time frame that you're going to trade on. You can base your bias based on this momentum principle. So it's very, very powerful. Even for intraday, from a higher time frame to a lower time frame, you can base your bias based on this momentum principle, and it will be very good and valid for you in terms of pushing your curve to positive territory. Right. The second thing, how you can use this is in terms of your target. It's in terms of your target projection. So let me just show you what we do over here. So you see, based on the momentum principle, we can now derive another equation which is called the ER, efficiency ratio, which was introduced by Perry Kaufman. Now, in terms of this momentum and efficiency ratio principle, now we can also project targets to see how efficient is your move or how noisy is your move. Now, if you were to get to a particular target and you're waiting by the screen for the price to hit it, but of course professional traders will be looking at if the momentum is dropping, if the efficiency of the market is dropping. If that is the case, we will cut the trade out, we will take our money out, we won't hold on to the trade anymore. So that is what is very, very critical that you do need to know, and in terms of your target projection. So how this can help you? Firstly, I've showed you in terms of your bias. The second thing is in terms of your target. Now, all these levels that you're seeing over here, 0.7, 0.8, and on the upside as well, all these are target projection levels. Not only are we just measuring only that, we'll be measuring the ER as the trade progresses in terms of intraday as well. And the similar thing we can apply into end of day trades as well. Okay, so all these are definitely things that you can look into and consider. All right, so in terms of this topic, what we actually did cover today was what is momentum, and which I explained to you in the equation. The second thing is, why is it important? right? Because it's a non-lagging indicator, it's the fastest one, there's no derivatives involved in between. And the third thing we looked at is how can you use it? How can you use it? Definitely in terms of your bias and in terms of your target projection. Okay, so that's me on that topic. Now we'll go on to move on to in terms of our Forex Friday topics, in terms of our trade reconcile for the week. Okay, so which is the trade which ranks up for this week that has gone by? So we have this trade called, what we do is the dynamic breakout trade. Okay, the dynamic breakout trade. We took it this week alone on the 9th of June, and we exited on the 21st of June, which was in this week. Do remember that your trades are only considered for the week if it's based on the close date, based on the exit date. Okay, that's what we concerned about, that's what we care about. Okay, so on the week, on the date that you close is when you would consider it as that trade which has closed for that particular week based on the exit date, not on the entry date. All right, now what do we do in this strategy? So in this strategy, what we look at is in terms of what we call the dynamic breakout strategy. And we teach this in Traders Basecamp, and we look at particular patterns called a variation 4 or a variation 5 setup. Altogether, there's 6 trend variations that we have formulated, and we've collated it as a model. Okay, right. So in terms of that, in terms of the variation 4 setup, now let me just show this to you on the screen, what we actually did. So 9th of June, and that's probably over here on the news on the parliamentary elections, and that's when we caught the move on the break of this particular level over here, because we had a particular setup in terms of our dynamic breakout trade. Okay, now in terms of that, this was a variation 4 breakout is what we had, and we have entered based on that. And in terms of that, what we actually saw is that we had to trail it according to our trending bars setup, and that's where then we got our chunky profit of 104 pips. Okay, 104 pips is what we got. Okay, so over here, as you can see over here, let me just show you the trade. 12767 is where we got in, 12925, 12451, and at 12663 is where we got out on a trailing stop loss mechanism, okay, to cover our trade. 104 pips, 10 pounds a pip, that would give us 1040 pounds. Okay, that is what we had for this week running. Now other trades, what we have at the moment is actually, let's say, on in terms of liftoff 3.0, we have a dollar Swiss trade running. We have a dollar Swiss trade running, so I'll show you that at the moment. And so in terms of that, so this is our dollar Swiss trade. We got actually 2 positions on this. First one we got is the liftoff 3.0 strategy based on moving averages and momentum, and the second position that we have actually is on the smart money trade. On the elite strategy basis is what we have as well. So 2 positions on this, on the dollar Swiss, is what we have at the moment. Now secondly, what we do have as well on Morning Glory, this week there has been no trades at all, and the reason for that is, I'll just show you that in a minute, is because we had an engulfing pattern. And the engulfing pattern, what I want to show you is basically this over here, where we had a consolidation, a collation pattern, where we got an insider bar and everything else just gets muddled within that big engulfing bar. So when we get a setup like that, we are actually very careful on whether we want to take our positions or not. We're very cautious at that particular moment. Okay, so that's why we didn't actually take any particular trades as of this particular setups over here. Okay, right, so that's to do with Morning Glory. Now in terms of dynamic breakout, what we did have, I already told you, we did have 104 pips on that. Money bars, again, no trades this week. So, and finally we have profit turning point. We have an euro dollar position on profit turning point at the moment as well. I'll show you that in a moment. So profit turning point euro dollar. So let me just bring that up. So euro dollar over here is what we have at the moment, a profit turning point on this particular setup over here. Okay, so that's what we are doing, all right, in terms of euro dollar. So we have a live position basically on smart money and liftoff 3.0, the same trade reconcile here, dollar Swiss is what we have at the moment. Now in terms of profit turning point, what we also have at the moment is basically your euro dollar live is what we got at the moment, not closed out yet. And we also have a smart money trade as well. A smart money trade I already mentioned, dollar Swiss live, profit turning point, we have lift of 3.0, we got dollar Swiss as well. So at the moment we got two currencies live on three strategies, and we also have closed one trade already in terms of the dynamic breakout, which has got now overall 104 pips. So for this week, we have now in a trade reconcile manner, we have now accumulated 104 pips and 1,040 pounds at 10 pounds a pip profit. Okay, so that will give you a good overview of all the trade reconcile, all the positions that we are having at the moment, and also to see how we are applying all of this knowledge in real time, because that's what we are privileged in doing, in establishing the truth in this industry, and so that you all can see in full transparency in real time as we trade live with conviction. Okay, traders, so that's all from me on this video. So as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.